right, everybody, good morning. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Hope everybody's doing well. Happy Thanksgiving Eve. Great turnout here for a Wednesday at 10 a.m. Just want to do a quick sound check before I officially kind of kick things off. I want to welcome everybody joining me via GoToWebinar. If you guys don't mind, just type in something there that lets me know that you can hear me okay, you can see my screen. I want to welcome everybody joining me via YouTube as well. Um, so I'm not seeing any comments in there. How's everybody doing? Can you guys hear me okay? There we go. Thank you, Pat. Needed somebody out there to let me know that I wasn't talking to myself. Fantastic. Thank you, Ashwin, Robert. Great to have you guys here. Um, Let me introduce myself. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. I always like to introduce you guys to our education team. Very proud of these folks. I first started with VectorVest 17 years ago, just this past July. And when I first started, our education to our clients focused primarily on the VectorVest program. Everything and anything that had to do with the system of stock analysis, market analysis, how to build watch lists and build portfolios and run back tests and all the bells and whistles that you guys all have. And that's what our education focused on back then. And we really evolved over the years. I say that because now we teach folks how to trade options, how to manage an options portfolio, how to manage a retirement portfolio. A lot of people are self-directing retirement funds nowadays, hoping to get a little bit more of a return than the average performance, right? So you're just taking some money, self-directing it. It's still a retirement-minded portfolio, but you need help managing it. And then we teach traders different types of swing trading strategies as well. So I always say that we have you covered, no matter which type of portfolio you're managing, equity portfolio you're managing, or options. We have strategies and coaches that will help you successfully, grow your capital every single year. So here's what you're going to learn today: the difference between fundamental investors and technical traders, the VectorVest method of merging the two. Now, merging the two is not a novel approach. Many very, very good traders blend both for a more comprehensive perspective on the asset that they're looking to buy. Merging the two can be quite difficult because it does require a lot of legwork before you even consider, clicking that button to buy, clicking your mouse to buy the stock. Whether it be for the long term or the short term, there's a lot of legwork and research that does go into determining which stocks are viable candidates. The VectorVest method, if you guys are subscribers, know that it's much easier to analyze stocks because of the information and indicators that we provide. So we're going to talk about how we merge the two camps, the two different approaches to market trading. And then finally, this is an important part as well: how to quickly and easily identify the best trades. We don't want to, not only do we not want to spend too much time researching candidates, we just don't want to spend a lot of time identifying those as well. Now, if you guys stick with me to the end, we'll be together for about 45 minutes or so. If you stick with me to the end, I will share with you a copy of our slides that we're using today. A lot of slides in here, ton of content. I'll be in the slides for the most part throughout today's webinar. But if you stick with me to the end, just somebody say, "Hey, Jerry, don't forget the slides," and I'll put them in the handout section of your GoToWebinar control panel. Okay? All right, so the two different camps of investors. First, there's the fundamental analyst. Okay, the fundamental analyst evaluates securities to try to find the intrinsic value of the company. They will look at and research things such as income statements, earnings reports, balance sheets, cash flow statements. They'll look at macroeconomic factors like current interest rates and inflation. They will look at industry and sector strength to determine if a stock is suitable to buy. Now, fundamental investors are generally looking for long-term value. They're looking to buy stocks, they're looking to hold on to them for a long period of time. The longer, the better. Market conditions and, of course, underlying stock conditions might determine when you sell even a long-term investment. Okay. But these are the types of things that a fundamental analyst will parse through to determine if a stock is suitable for a long-term investment. The analyst knows what the stock's price is, right? So they're trying to find the intrinsic value of the company. They know what the market value of the stock is, right? They know what the stock is trading at. So determining the intrinsic value will lead them to an outcome of, is this stock that I'm interested in buying undervalued or overvalued? Is it an undervalued asset or is it an overvalued asset? If the price is below the value, it's an undervalued asset. If price is above its value, it's an overvalued asset. That's a big determination. It's a big determining factor in whether the investor, the long-term investor, will buy the stock. A technical analyst focuses on statistical and historical price and volume trends over time. Okay? They believe that all of the financial data is already baked into the stock's price, and it's market psychology and market behavior that dictates price direction. They'll look at historical price and volume data. Okay? And they believe that history repeats itself, and patterns repeat themselves, and they're looking for similar situations currently that happened in the past to identify viable candidates. Okay? Now, get these two folks in a room, and they will argue till they're blue in the face who's right. We believe that both methods are valid. And what we want to do is leverage the strengths of both to compensate for each's weakness or weaknesses. To blend the approach, okay, and this is what we're going to really focus on here today, you'll first initially gauge what the intrinsic value of the company is through fundamental valuation and fundamental analysis. Normally, again, this would involve going through financial statements and looking at sector and industry trends and other factors, qualitative and quantitative, right? What you'll then do is identify, using technical analysis, optimal entry and exit points. There's two different ways to think about this. There's the buy and hold investors' mindset going into an investment, right? Normally what you do is if you do your due diligence and you go through the financial data and you determine whether the stock is suitable to buy or not, right? That's fundamental analysis. Normally what an investor will then do is run out and buy the stock that day or maybe the day after. Knowing that, hey, I've done my research. I think this stock has tremendous upside potential long term, multiple years out. At the current price, with their valuation, you might be looking at 2x, maybe 3x returns long term, couple of years out. An investor might go out and say, buy its stock. I love it at 50. Fantastic. I think it's going to go to 100, 120 in the next couple of years. I'm happy with $50. What we want to do, and that's not really maximizing returns, is it? Because you might evaluate the stock based on its fundamentals, but in the short term, is the stock's price more likely to fall or rise? That's where technical analysis comes into play, even for the fundamental investor. Because if you don't think a 5 to 6% discount is worth waiting, then you got to rethink that. Because over time, a 5% discount now, in the next 1 to 3 years, you're probably looking at an extra maybe 50% potentially on your return. as opposed to just buying it at the current market price. That's looking at it from the investor's point of view. You're analyzing the stock. You know it's a strong company. You're looking for a better buying opportunity, even though you're holding on to the position for a long period of time. Then there's the other side of it. There's the trader's mindset, who should analyze the stock first based on its fundamentals, and also, of course, because they're trading it, they're planning on swing trading it and not holding it for a short period of time, then apply, of course, technical analysis to the stock to determine a better buying opportunity. So let's look at an example. We'll look at a couple examples here. McKesson Corp. This is as of just a week ago, November 13th, 2013, and this is the first initial um, analysis that you want to do. So as of November 13th, price of McKesson was $470.64, and the value, what we think it's currently worth, is $634.01. So for an investor to determine what the intrinsic value of the company is in a dollar amount, right? That does require a lot of legwork, doesn't it? If you don't have VectorVest and you have to go through and gather all of these financial statements and earnings reports and then figure out what the value of the company is, man, if you're smart enough to do that, fantastic. But there are easier ways. And of course, with VectorVest, we give a value on every stock every day. We go through that data, folks. We go through all of those reports, and we get our data from FactSet, and we look at past earnings reports and cash flow statements and balance sheets and all of that stuff, earnings growth, and we determine a value. So far so good with McKesson, right? You got a stock that's trading at 470. We think it's worth a 634. Fantastic. Not quite, 2x, but you're looking at a really nice long-term return here right off the bat. The next two indicators, I want you to consider them fundamental indicators. Fundamental data goes into those indicators. Relative value, both of these indicators are on a 0 to 2 scale. Relative value looks at the long-term upside potential of the stock. So while value looks at the current value, the intrinsic value currently, today, relative value looks at long-term upside. What's the long-term value potential of this stock? And at 1.42, that's great. That's excellent on a 0 to 2 scale. So not only is it undervalued now, we feel that future growth and future value is here. It's a relatively safe investment. We're looking at an RS value of 1.09. So things like consistency and predictability of earnings and low debt to equity ratio and high sales volume, all of those factors go into relative safety. So with an RS of 1.09, it's pretty good on a 0 to 2 scale. Then you get into some earnings information. All right, so they're earning $29.89 a share. Well, it's a pretty expensive stock, but that's a 6% yield. And they're growing their earnings at 20% a year. That's also very important, right? They happen to pay a dividend, pretty decent 2.5%. I'm sorry, that's $2.48 annualized dividend, only about 0.5% yield, but their dividend safety is good at 78. Their dividend growth is good, is at 13%. Guys, this is what a fundamentally sound company looks like. And how long did that take us? Maybe 2 minutes? Take a look at any stock in the program, throw up any stock that you're thinking about buying, and go through this same exercise here. Determine whether it's undervalued or not, or overvalued. What's the long-term upside potential? How safe is the investment? And how do the other earnings and fundamental data look like? Okay. That was a snapshot of those indicators as of November 13th of this year, just about a week ago. Now, the hard right edge of this graph is October of 2022. And I'll explain kind of why we're looking at this time frame here. So from October of 21 to October 22, I mean, you could have bought this stock when it first got a buy here in November of 21, earnings per share rising, RV well above 1, RS above 1, earnings growth rate at about 18%, and that was back here in November of 21. So the same exercise that we just did on McKesson from November 13th, you're doing that, of course, moving forward. That's what you're looking for. And even then, even back in November of 21, you had not only a buy rating, but favorable indicators. Good time to buy it back then. And if you did, the stock never got a sell rating. Fundamentals keep improving. You're holding this stock long term in your retirement portfolio or any type of capital appreciation long term type portfolio, right? Growth portfolio. Okay. Now, that's if you would have bought it back then. Now, if you would have bought it back then, and you have this long-term investment in your portfolio, what's to say that you can't trade it along the way? I hope you guys maybe are doing that. I spoke to somebody yesterday in one of my webinars. Said I do that on. He does that on Tesla. He owns Tesla long term, but he trades it along the way. He's got another portfolio where it's more of an actively traded portfolio, and he's trading Tesla, at each strong buying opportunity. Same goes with McKesson here. If you hold it long term, there's nothing to say that you just can't trade it along the way when you see favorable price volume situations. So let's take a look at the hard right edge as an example. So if I'm looking at McKesson and let's say again, you do own it in your long-term portfolio and you want to trade it, right? You want to capture short-term big moves on breakouts or reversals. And you're looking for opportunities. As of the hard right edge, I'm not ready to trade this stock yet. Again, I own it. It's in my long-term portfolio, but I'm not looking to trade this right now. What I'm seeing is price just recently. Now let's take our fundamental analysts' hats off now. Right, that work has been done already. We analyze the stock. We know it's a fundamentally sound company. So we take that hat off. We put our traders' hats on now. And what I'm seeing here as of the hard right edge, October 2022, I see a stock that has just recently pulled back from a new 52-week high. Looks like a little double top potentially. Okay, just a little level of resistance right at about 370, almost 380. Stock had pulled back and it's capitulated here at this white line. What is this white line at 340? This white line is support. It's a support area. It used to be resistance until price broke above it in August of last year. And then what we're seeing now as of October of 22 is our first retest of support. Now, I don't like to buy at support. Support is kind of a tug of war zone. Right? You got buyers and sellers jockeying for position. Who's going to who's going to push price off of the zone? Who's going to push price below the zone? Right? Are the sellers going to push price below the zone or the buyers going to push it above the zone? So I don't buy at support. I look for a retracement off of support. And what I would look for specifically in this situation is a little mini breakout above the most recent high. If you're an investor and you're looking at this and you're hearing me and you're saying, I've never even considered anything like this, I would have just bought the stock. If you do your fundamental research, you do your fundamental analysis, the time is right to buy. Normally what you do is just go run out and buy it. But I'm trying to maximize returns. Okay, so even if you're considering buying this for the long term, let's wait for a breakout. Let's wait for a breakout. Remember, the support zone is that tug of war area. You don't know which direction price is going to go. Right? Just like here, where the stock price rallied, approached the recent high. You could have said there, I'm going to buy it. It's going to break out. You don't know if it's going to break out or not. And it just retraced quite a bit. You dug yourself too deep into a hole. Sure, you're higher now than you were when you bought it, but you dug yourself out of a hole there initially. We want to try to minimize the number of times we dig ourselves out of initial holes. And technical analysis and paying attention to these support levels will help. So we did get that breakout there on October 4th of 2022. Another indicator, I'm not going to throw too many indicators at you, but another indicator that I really like is stochastics. The stochastics oscillator, it oscillates between 0 and 100. When the indicator goes below 20, that's indicating an oversold position, oversold situation. Cross from below 20 to above 20, which we see here on October 4th, along with a support retracement. Guys, that's a really strong short-term signal. Really strong signal. Coming out of an oversold situation, retracing from a demand zone, a support zone, really strong signal there. If I were then, let's talk about how to manage this trade. I'm not going to talk about much about how to manage the investment, even though this might be an investment for you, right? Remember, we analyzed the stock based on its fundamentals. We indicated that it's strong. We looked for a little breakout or retracement off of support. I want to buy it for the long term. I got myself a signal now. You're going to manage this investment a lot differently than you would manage the trade. You guys know that, right? So recommendation equals sell. If we ever give us an investment that you hold a sell rating, that may be a time to consider selling the stock. If the underlying fundamentals of the company begin to deteriorate, that might be an opportunity to sell the stock as well. But what I'm about to go through here is not that. What I'm about to show you and walk you through are just methods of how to manage the swing trade. That resistance level that we just came off of at about 370 and change would be my initial profit target, right? That seems to be resistance, right? I mean, it's a level at which the stock price failed to move higher twice. So I would look at that zone as an initial profit target. What I'm fast forwarding here is we want to make sure that not only do we get the breakout, but we get follow through, and we got follow through during the day, the following day. Okay, so I want to make sure that you understand about follow through. You wait for the stock to break out, and then you enter the trade the next day on follow through. Now, you might be wondering, well, what was the market doing on that day? You know, you're telling me that that was a good time to buy the stock, but was it a good time to buy stocks in general? So if we look back to October 4th of 2022, the market had gotten crushed there, hitting a new 52-week low. Our market timing indicators, the MTI and buy to sell ratio, had gone below their respective oversold levels of 0.60 and 0.20, and we got this huge rally on October 4th, and the primary wave turned up, and that was an indication that it's okay to start buying stocks again. Okay, and our guidance in the VectorVest views reflected that. Okay, so just going back to the stock, because I always want to drive home the fact that you can buy stocks for the long term, and fundamental analysis is going to lead you to those type of stocks. But you can continue to trade them along the way if you see favorable situations and more attractive buying opportunities. So this little trade here, this little breakout or retracement off of support on October 4th of 2022, for the next several weeks, because I know I said that this red line here, this resistance level, was my initial profit target. What I generally do is I look for hesitation in that resistance zone. Okay, because you know I do want to maximize my returns, and any hesitation in that zone, I'm going to look to take my profits off the table. Did we get hesitation in that zone? We did not. This big green candle there landed right at it, closed at the high. The next day the stock gapped up and continued just to break out. So you're allowing this position or to stay in your portfolio, your swing trading portfolio. And on that day, that's the first sign of weakness, right? The first sign of weakness. The stock did open higher, but it did close near the low of the session. First sign of weakness there. I'm going to look to take the trade off. I'm okay with an 8%, 8.5% return in just a couple of weeks. Guys, that's annualized out to 140%. I'm not saying you're going to make 140% every year. I just want, comparing apples to apples, 8.5% in this shorter period of time is a very significant return. Okay? Worst case scenario, you look for a bearish candlestick reversal signal. And we got one there. That's called a one black crow. Okay, one black crow with follow through the next day is a signal that I would take to close a short-term long position. Then what I would do, take my profits. Then what I would do is I look for another opportunity. We've done the fundamental analysis already. We know it's a good company. You don't have to keep doing that. although, it would be a nice exercise at least to look at the numbers quickly, right? Because if you see a deterioration, and we wouldn't see a deterioration in fundamentals this soon, right, this quickly. But over time, if you continue to if you like to trade the same stock, make sure the fundamentals are still strong. Okay, I would look for then a retest of this red line. This red line is now support. It used to be resistance. Once price breaks above resistance, it becomes support. I would look for the stock price to fall back to that red line and then retrace from it before I would take the position. Follow my cursor here. This is what we were just looking at, the hard right edge. Did the stock retrace back to that red line? It did. Took about a week or two, but it did right here, didn't it? Landed right on that red line. However, we did not see a retracement off of that red line. We actually saw a breakdown again and a retest all the way back down to the original support level that we took to trade. We got that, look at that long lower wick there. You got the retracement off of support. I'm looking to buy it back at a lower price than which I sold it at. Okay. And if this was a position in your long-term portfolio during this time period right here, from August of 22 to March of 23, you're not making any money, right? You are flat. So the investment in this stock is not bearing any returns, but you guys are much better equipped now to supplement the stagnation or the stagnant performance in this stock in your long-term investment with short-term gains here. And I say you're better equipped because now you have just a couple of indicators. There are a lot more indicators to use, and I'll talk about how you can learn them more a little bit later. But these are just a few. These are just a few indicators that you can consider using to identify short-term trading opportunities on stocks that you hold in a longer-term portfolio. Those same indicators can be used for a long-term investor who is looking for a better buying opportunity as opposed to just buying it at a high, right? Let's take a look at another example. United, great stock, best of breed, one of the best healthcare companies, that we see. As of November 13th, the price was $542.57. We think it was worth or is worth $571.33. Okay, so that's fairly valued. Price is below its value. How are the fundamentals? How's the long-term upside potential? Very good, 1.27. Good upside potential over the next 1 to 3 years. Is it a safe or a risky investment? It's a rather safe investment. Do they earn money? They do. $27.18. We're forecasting them to grow that at 16% over the next year. They pay a pretty good dividend. They got good dividend safety, good dividend growth. Again, this is a snapshot of what a fundamentally sound company looks like. Here's the chart from, looks like August of 20 all the way to February of 23. That's a long period of time, guys. That's, 2.5 years here. Not once during this entire time period, I'm sorry, just once right here, did the stock get a sell rating. So if you would have bought it back in August of 2020, right, earnings rising, RV at 1.5 at the time, RS at 1.4, earnings growth rate at about the same 16-17% or so. No reason why this is not a viable long-term investment candidate, right? And if it was, and you bought it, you really only sold it once. I mean, I would argue that we did get the stock a sell rating, but it never followed through. So you may not have gotten rid of that on that one sell rating. Maybe you look for a sell rating over the next couple of days, and we never got that. So let's, again, take our fundamental analyst hats off and look for ways to supplement the obvious long-term returns, right, with shorter-term gains. And stocks like United that are so actively traded, they are rather predictable at times, okay? You can see back here, was it November, December 2020, March 2021, the stock really didn't go anywhere for a little while. It bounced off of this about $375 resistance zone three times. So I'm looking for a nice, so if I'm looking for at this stock, and maybe I do hold it long term, maybe I don't. I'm just looking for a nice breakout. There on April 15th of 21, you finally got your breakout. Got your breakout above resistance. There is your buying opportunity um, for either a long-term investment, a new position in a long-term investment, or a short-term trade. So if I'm looking at this as the hard right edge, this area here, I don't want to buy it there. I know I got to get a big up day here. I don't want to buy it there. It's failing to make a new high. Okay, and you can see what happened, pulled back off of that high. You retested again, a little mini pullback. I'm waiting for a breakout, waiting for a breakout. Okay, got your breakout. That resistance level becomes support. And again, it's no coincidence that stock prices stop falling and stop rising at certain levels. So there on June 21st, 2021, the stock price retested support for the first time, right? Because again, it used to be resistance, now it's support. When price broke out above resistance, which gave you a good buying opportunity, it came back down to retest that zone there in June of 2021, giving you another buying opportunity. You had a rally and an opportunity for profits. You had a retracement off of resistance again, and another retracement in October of 2021 back to support. And look at the two times here. Let me back up. Look at what that support retracement coincided with. It coincided with your stochastics oscillator going from below 20 to above 20, a very strong combo signal when you have both. When you have a retracement off of support and a stochastics going from oversold to trending now, you got a really strong short-term signal. Okay, so here, price broke out above resistance and almost an immediate retest of that support level. That retest not only stopped at support, but you could see the stochastics oscillator went below 20, another very strong short-term signal. And what you're doing, guys, is you're time and time again looking for these opportunities. You're looking for these opportunities in a new long-term position. Because look, I can't back it up because it's a slide, but let's say, look at my cursor right here, right? Let's say you're looking at roughly January of 2021 and 22, excuse me. And the stock price is rising and it's approaching a recent high. And, this is a new candidate for you. Maybe, you just kind of research the stock and you're looking to buy it and you go out and buy it. It had a buy rating. Just because it has a buy rating doesn't mean you just run out and buy it. It had a buy rating here, and look what happened. It failed to break above a recent high here, and it came all the way back down, and you dug yourself into about a 10% hole right out of the gate. You buy it at about 500, drops to 450 pretty much immediately, and you dig yourself in too deep of a hole. How about waiting? If you recognize that this $440 level, is support, wait for either a breakout above resistance, which is a very bullish signal, or a retest of support and retracement off of that support level, which is another very bullish signal. Time and time again, you're looking for these opportunities. Now, sometimes these support and resistance levels will elevate, and now you enter into a higher channel. Now you're buying stocks again at higher prices, but you're selling them at higher prices from which you buy them at. Okay? So that's kind of the basic overall concept. That's what we want to do. Okay? That's our goal. We want to mesh and blend the two approaches together. The first exercise is to analyze the stock for its fundamentals, and then next is you look at technical indicators and support, resistance, just to name a few, to find some good opportunities. Now the question becomes, how am I going to find trades? Right? There's a couple of different methods. There's what we call the one-by-one method. All right, this is where you look at a list of stocks. I think the fundamental analysis part is rather easy because the indicators are very clear, easy to understand. If you're looking at a stock like Micron here, these prices and values are older. But you got an undervalued stock with tremendous long-term upside potential. It's safe. It's got a high VST, good earnings growth rate. So very easily you're able to determine if the stock is suitable to buy or not. The next step would be then looking at the price chart. We're looking at the chart and identifying today if you have a favorable situation, if you have a buying opportunity. Now that could require you to go through a lot of charts. Okay. My preferred method is to use a scan. Scans will help you, save so much time um, in researching stocks to buy. I always like to say that the scans, no matter what type of scan it is, it gets you most of the way there. It saves you from having to just go through, a list of hundreds of stocks to find a handful. Scans get you most of the way there. For example, this is it's not, the holy grail of scans, but it's a good example on what we're looking for. There's a search in the Unisearch tool in the strategies or searches prudent folder called prudent performers. The prudent performers scan looks for stocks with an earnings growth rate of greater than 15%, a relative safety greater than 1.15, relative value greater than 1.25, and sorted by VST, bringing the stocks with the best combination of value, safety, and timing to the top of the list. I mean, isn't that what we've been looking for or looking at, right, with McKesson and United? That's what we're looking for. High RV, high RS, good earnings growth rate, solid VST. That's kind of the pool of stocks that we want to be in. Okay. One line parameter I added here. Okay. I added stochastics crossing above 20 in the past 1 day. So these are fundamentally sound companies. However, they've pulled back a little bit recently. They're not at 52-week highs. Maybe they're just coming off of a 52-week high, but they've pulled back enough, at least in the short term, where the stochastics oscillator went from below 20. We now know that a stochastics crossing from below 20 to above 20 is a good opportunity, and we saw that graphically a number of times on the stocks that we looked at. Right, so you can kind of imagine what the stock's prices had been doing, rising from bottom left to upper right, but recently it pulled back, and the stochastics went from below 20 to above 20. Quick little test here, just recently, November 1st of this year, just a few weeks ago, the primary wave first turned up off of the bottom. Okay, got the bullish Harami the day before. You got the blast off the day after. November 1st is when the primary wave first turned up. This little search looking for good quality stocks that had been beaten down but are just coming out of that oversold situation. 9 winners, 1 loser, 10% return, outperforming the market. The VectorVest composite went up about 7% over this time period. That's a pretty big move on the VectorVest composite, right? Pretty big move on the market in just a few weeks. But this approach outperformed it. Okay, this approach outperformed it. Take a look at NVIDIA. This was the biggest winner? No, not quite the biggest winner, but top stock in the list on that day, up 17.5%. And here was our trade date. Look at that, guys. November 1st, 2023. This stock had been going nowhere for a while. These red lines here indicate support levels, right? It was resistance back here. Price broke above it, retested it, retested it, retested it, retested it, and then on November 1st came back down and retested it. Look at that hammer the day before. The stochastics oscillator goes from below 20 to above 20. That's really the signal that the search is looking for, right? If it's also retracing from support, which I said earlier is a very strong combo signal. Retracing from support with stochastics crossing from below 20 to above 20, really strong signal, guys. And that was like that was the beginning. So again, if you were looking to buy NVIDIA long term, that was a great signal to take the investment. Is it now? Is it now? Let's take a look. Let me look at the chart here real quick. Let's go here. Whoops. Whoa. There we go. All right. There's the market. We'll look at NVIDIA here real quick. Hard right edge of NVIDIA. So interesting. So I think it was about right here where I said, is now the time to buy it, right? Let's go back to the chart, right? Right around this, the hard right edge here. So the question I just asked was, is now the time to buy it? If we were looking at this as the hard right edge, we missed this opportunity and we're looking at it now. Should I buy it now? It's very overbought in the short term. Look at how high stochastics is, well above 80 here. If we go to the chart, we'll show you. Put stochastics on. The stock price is failing, guys. Look what it's doing. You see this resistance level right here? It's failing to break above that zone. Do I have support and resistance? Let me put on support and resistance. First off, stochastics well above 80, indicating an overbought situation currently. If I put on support and resistance, we are right in this resistance zone, 478, 40, 49. So the answer is no. The answer is no. That I'm sorry. Is this the hard right edge? No. No. There we go. Okay. So this is the hard right edge. No. Now is not the time to buy Nvidia. Unfortunately, what I would love to see, I don't know if we're going to see it, a retest all the way back down to this 397 zone. Would love to see that. Now, why am I saying the stock? It's the time is not right to buy right now. Well, it's falling, and it's retesting this support level. Okay. If we see a retracement off of 478.49 to the upside, that would be a good signal to take the trade. So especially with a short-term trade, I'm sure I should say it this way. No matter if it's a short-term trade or a long-term investment, you need a strong buying zone, a strong buying opportunity before you take it. And right now, with price falling off of a new 52-week high, but settling in hopefully to this support level, I would put this stock in a watch list and look for either a retracement off of 478.49 or hopefully a retest all the way back down to 397. Again, not sure you're going to get it. Okay. So you might be asking, how can I begin applying this to my current routine? You do have a choice. You can do nothing. You can do it alone, maybe take bits and pieces of what I taught you here today, or you can let us show you how. No matter what I try to do, I try to make it as painless as possible. So I always like to be given answers. And that's why we put together this course. It's called Uncovering Trends, Technical Analysis the Easy Way. And it's a complete technical analysis course where we merge fundamental valuation with dozens and dozens of different technical setups and indicators that you can apply to not only short-term trades, but longer-term investments as well to maximize returns. The complete course comes with 6 training modules. Now, there are 60, I think 4, maybe 64, 65 lessons within each of those within those 6 training modules. You'll get the videos, the slides, all the graph resources, and more. 1-year access to the course. We're going to be doing, this is a mastery package, so we're going to be doing 7 live mastery support sessions to cover and review the contents of all the modules and all the lessons in the modules. You get private dedicated email support. We're also going to give you 70 days access to the VectorVest premium package if you don't already have it. If you do already have it, which means that you took a trial in the past to the VectorVest Premium, we're giving folks who have never taken VectorVest Premium trial before an opportunity to try it out for 70 days during the duration of the course. The 6 modules that I just spoke about, here they are. Here's a little bit of what they include. They are all pre-recorded. So when you register for the course, okay, you go into the outline, you'll see all of the modules and all of the lessons there. You'll also see all the live, or not live, all of the, well, they were live a couple of months ago when we did the live mastery sessions, but you'll see them in there as well. After we do our sessions for this upcoming class, I'm going to replace our sessions with those. So over the next year, during the time that you have access to the course, you're getting new content. You're getting new mastery sessions as we go, as we do them. So module number 1, we talk a little bit more about the difference between fundamental and technical analysis, the importance of market direction. Then in module 2, the importance of price structure and volume analysis, candlestick trading. Module 4 is a beast. It's a technical indicator module. I think there's about 16 or 17 indicators that we teach. So it is a complete technical analysis course. Then we get into trade management and psychology. Very important module here. We talk about here managing ourselves and understanding that things aren't going to always go well, and how we react and kind of adjust is important. And then module number 6, the VectorVest Advantage. So this course valued at $1,990 Early bird rate is available for $14.95. But what I'm going to do for you guys here, it's a Wednesday at just about 10 o'clock in the morning. I want to thank you guys for joining me here today. So we're going to offer a very special rate, $895 for 6 modules, 7 live mastery support sessions, 60 plus lessons, 70 days access to VectorVest Premium if you don't already have it, and of course a 1 year access to the course. What I just did is I put the address that you guys see at the bottom there, vectorvest.com/trends, in the chat box, so you can just click on it. By the way, guys, this is 100% money back guaranteed. If you take the course, you go through the 7 weeks, you do any assignments that we give, you watch the recordings, you come to the classes, or at least watch the recordings. We do know if you guys do or not. And at the end of the 7 weeks, you're still not satisfied, we'll gladly give you a refund. So when are the live sessions, and what if you miss one? Here are the dates for the live mastery support sessions. We begin, 2 weeks from today, December 6th. Each session begins at 1 p.m. Eastern Time. Again, they all are recorded. And you'll notice there are 6 modules, but 7 mastery sessions, right? There are 2 parts to mastery session number 4. It's because I said that mastery module number 4 is a beast, right? We got 16 or 17 different indicators. We realized during the first class that we did this this past year, as a pretty new course, that it wasn't enough. One session to cover all of those indicators in module number 4 wasn't enough, so we decided to break up mastery session number 4, or module number 4's mastery session, into 2 parts. Okay. When you register for the course, you will get an email with all of these dates here, all of the times. You'll have directions on how to access the course as well. Okay. Any questions, guys, on anything that I covered today? Any questions about the course itself? I can stick around if you guys have any questions. Again, 2 weeks from today is when we begin. If you go to vectorvest.com/trends, my email address is jerryd, Jerry, D as in David, @vectorvest.com. Feel free to shoot me an email. By the way, myself, Ron Wheeler, Stan Heller, and the late Dr. David Paul were your instructors for these modules. Now, of course, David won't be here for the mastery sessions, but Ron and I and Rick Franklin, who is our now new Canadian consultant, will be handling the mastery sessions for this class. All of these modules that you see here, guys, are pre-recorded. Okay, they're pre-recorded, so you'll hear David, you'll hear Stan Heller, you'll hear me, you'll hear Ron for the core modules themselves. But again, the mastery sessions will be live, and they begin in 2 weeks. Ashwin says, are these indicator scans available on the mobile app? They are not. They are not. The scans, now there are no new, we're not going to be putting any scans into your program, any custom scans, but anything that we use, you already have in the VectorVest desktop version. So the indicators, some indicators are, but the scans are not available on the mobile app. All right, everybody. Hope you guys have a great Thanksgiving. If you guys are here in the States, of course, the market's closed tomorrow. Abbreviated session on Friday with it closing at 1 p.m. So I look forward to working with you guys. We start in a couple weeks. Again, if you have any questions at all, feel free to shoot me an email. Take care, everybody. See everybody soon.